Traders, how you doing? David with Alexander Trade and Investment Group, and we're going to talk about how to make a living day trading. This is pretty much a part three to the two videos that I did create, one about market profile and the other one I created about order flow. I'm going to post the video link to those two in the description. But now we're going to put those things together, market profile and order flow, and we're going to talk about how to spot the opportunities, when to buy and when to sell. Now, the only part that we're not going to talk about is economics. We're not going to talk about the reports, which helps bring those things together and could be the catalyst to buy or sell. And that's pretty simple. And I'm going to leave the link of what I use to get those reports in the description as well. But let's start with market profile. And let's talk about what market profile is, how to spot opportunities, and why is it useful. So in front of you, you guys are seeing a group of market profiles. Each profile represents one day, and in each profile is split into 30 minutes, right? So each period represents 30 minutes. So there's an A period, B period, all the way down to M period, which is the last 30 minutes of the day. There's a couple different ways to look at market profile. What you guys are seeing in front of you is the standard way of looking at it, which gives you pretty much the exact same information if you was to look at it in a split, which we're going to see in a second. Market profile basically allows traders to observe two-way auctions between buyers and sellers. It puts it in a nice, neat package. Okay. And it's also called TPO. If anyone has ever heard of market profile, TPO stands for time, price, opportunity. And the reason why it stands for that is because market profile doesn't only provide you price, but it also provides you value, right? I always use the example of if you are in the market for anything, but let's for this example, if you are in the market for television, let's say you are in the market for a Samsung television. And let's just pretend like this chart is representing Samsung and each profile represents a day. Let's say you go into any box store, for example, Walmart, and you are in the market for a Samsung TV. You go back there and the TV that you want is selling for $1,000. Okay. Now you look at that TV, though, even though you're in the market for it, in the back of your mind, you're thinking, I want the TV. It's nice, but I don't know if it's worth $1,000. Now, if you get enough people to feel that way who are in the market for a television, they like it, but they don't think it's worth that price tag, then enough people are not going to buy it. So what the box store has to do is they have to drop prices in order to attract buyers. Now, let's say you leave that box store and you come back the next week, and that same TV that you're in the market for is now selling for $500. That's a good price. Now you're thinking, that's the TV that I want. I think is more than fair value at $500. I'm gonna buy it. All right. Then if you get enough people who feel that same way, that $500, that TV is worth $500, then more people are gonna buy it. So what that box store is gonna do, now they're gonna start testing prices. Well, if people are buying it at 500, let's see if they'll buy it for six. Okay, 600. There's still people willing to buy it. They feel like that Samsung TV is valued at $600. All right, the box store is going to test it again. Let's raise price to $700. Okay, sales start to slow down, but you still get enough people that the box store is saying, okay, 700 people are still buying it. Let's test it at eight and let's test it at nine. Now, as it goes to eight and nine, there's less and less people willing to buy it till eventually it starts to slow down. And you know what the box store has to do again to attract more people? Drop prices. Essentially, that is exactly what the marketplace is. That's what the market is in its totality. It is a big auction place, an auction block. And it doesn't matter which auction you participate in. I know we were using the example of Samsung. If you are in the market for an iPhone, if you like Amazon or Nvidia, whatever auction you choose to participate in, if you're a futures trader, you're a crypto trader, forex trader, anything that trades, there are buyers, they have buyers and sellers, will create a profile. All right. So let's focus on this profile right here. This is the profile of January 17th, 2025. And I have my little nice arrow there. I'm gonna go ahead and remove that. So in the traditional way of looking at market profile, let's make it a little bigger. In the traditional way of looking at it, you're still gonna get price. So this orange box right here, hopefully you guys can see that right there, represents the open. Okay. And this red one represents the close. Okay. So open, cash open is 9:30, cash close is at 4. So it opened um at 226.93. If I hover over it, you can see the price change. So if I hover over it, 226.93. And then if I go back to, let's say, 4 o'clock, roughly, we're looking at cash close 225.43 roughly. Okay. So it opened higher at 226.93 and closed lower at roughly 225.62. So this was technically a negative day, right? Open higher, close lower, right? So you're getting price with market profile. One of the great things that you're getting also with market profile is value, right? So in between these lines here, right? This is roughly 226.25 and 225.17. Let me use my little nice little arrow. That line there and this line here. In between that is what other market participants that participated in this auction, IWM, felt that IWM was valued between this price. All right. So roughly 226.24 and 225.17 is value. Okay. We call the top of that value high and the bottom of that value low. In between that is POC, point of control. That's where buyers and sellers agreed on price the most. And that's roughly 225.80 in this profile. Okay. So when I say that we can see price and value, let's take a step back to this profile. This profile is January 16th. Again, we get price. If you can see this orange box here, that's roughly opened at 224.15 and closed roughly 224.56. So technically, price went up, right? It was a green day. But in between these lines here, value high and value low that we saw from the previous profile here and there lies value. This is where other buyers and sellers who participated in the market that day, January the 16th, felt IWM was valuable. Between the 16th and the 17th, you can see value actually went higher. So we can see that the in this, let's say, go back to the Samsung example, and the box store, let's say Walmart, was testing prices. So the value, Walmart was testing prices going from, let's say, $500. Well, let's go back to this example. The value top was 224.80 roughly. They're testing it around 226, 225, right? And let's see if there are going to be more people willing to buy, in this example, IWM, or if you want to use the example of a Samsung TV, let's see if people are willing to buy at these higher prices. So value went up. Just because value went up doesn't mean people are willing to buy or think that IWM, or if you want to still use the example of the television, is worth these high prices, even though it's gone up in value. All right. So even though we spotted that value has gone up, let's go back to price. Again, price opened on the 17th, roughly 226.83 and closed roughly 225.44. So even though value of IWM, or let's use the example of a television, has gone up, other market participants say, you know what, IWM or the TV is not worth the 226 price tag. Okay, so the people stop buying it. All right, so let's go down to 220, this 226, 225. I like it, but I don't think it's worth 225 price tag. So they continue to drop prices until they attract more people to say, all right, the 224, I think, because you can see that this TPO price came down to 224.82. I think 224 is worth it. So you start seeing a little bit of buying. All right. So that's what you get from the market profile. You not only get price, but you also get value. If you again look at it in the example of a television or a phone or whatever item you want to put in that example, it's not so much about price. If you go to any store or any auction, there's always an advertised price, right? That doesn't mean, or if you think of real estate, for example, if you're in the market to buy a home, and let's say the home that you really like, or they're selling a home for like 500,000, you really like that house, and they're advertising the sell of that house at 500. That doesn't mean they're going to get 500. You can negotiate that price down to, let's say, 450, right? So the price that you see on the right axle is just the advertised price. That doesn't necessarily mean that other participants or other people who are in the market for that item is going to buy at those higher prices. There's some negotiation. And if there's enough people that's not willing to buy, then the market has to drop prices. Or adversely, if the prices are attractive and there's enough people willing to buy at those attractive prices, then you're going to see the market test higher. All right, if they're willing to buy, back to the example of a house. So you wasn't willing to buy at 500,000, but they dropped price at 450. If you get enough people that's willing to buy at the 450, then you get a little bidding war. So then they start to test it. All right, well, if you willing, the people willing to buy at 450, let's try 475. Okay, you're still getting some offers. Let's try 485. Not as many offers, but you're still getting it, right? And then you say they bump it to 490. You're getting less and less offers now. It's a nice home. You decorated it nice. The curve appeal is great, but that price tag, you get enough people who think that price tag is not worth the home, you're not going to get people to buy it, or less and less people willing to buy it. That's the exact same thing you get with market profile. Now, again, you're looking at the standard way of looking at it, which is great. You get a lot of information. I prefer looking at it in split. In split, you get the exact same information. Let's change. We're going to focus on the January 17th profile, but let's change it to a split. Okay. Now you're starting to see the letters. The letters represent the time period. So again, this is a market profile that represents an entire day. So think of it as if you're looking at um, a standard candlestick, and you're looking at a day rotation. This is essentially what that is. It represents one day, but it's broken up in 30 minutes. And each letter represents 30 minutes. So A period is the first 30 minutes, B period is the second, C is the third, and so on and so on until you get to M. M is the last 30 minutes. But the reason why I like looking at the split, because you get to see not only price, right? You still get the price axle on the right. You still get the value between value high and value low. Anything between that is the value of whatever you're participating in. And you still get the POC, which is the point of control, is where buyers and sellers agreed on price the most. But you also get to see kind of a bonus is you get to see where new money has come in, right? So for example, we seeing from January 16th to January 17th, value has gone up, right? What's between the in the blue box is considered value. So from the 16th to the 17th, value has gone up. So we get value. We also get to see price, right? So we open roughly 226.88 and close roughly, if I was to squeeze it, you get that red box, 225.43. So we not only get value and price, but we now get to see where other participants said, 226 is too much. And then in the B period, 226.46 was too much. So let's me do arrows. All right, so here's the A period. Open roughly 226.88. Price didn't last that long, right? Because it ended up dropping. By the time we get to the B period, my arrow, we get to the B period, price didn't even get up to the 226.70s, 226.90s, right? You already knew that price, other participants felt like IWM was not worth the 226 price tag. So in each period, price has gone lower and lower. You get to the F period and the G period right here, they tested a little higher, the 226.22s, but nowhere near the 226.40, 226.60, or 226.80 price tag. So in each period, when you split it, you get to see where new money, in this case, sellers, what price down, right? So they didn't like price here at the 226.57 price tag. They didn't like it here in the C period, 226.40. So they kept prices from going higher. D didn't go nowhere near that. E didn't go nowhere near that. But then F and G tried to test it, the 226.20 price tag, but dropped it. All right. H didn't go nowhere near it. I, J, K, L. The last 30 minutes, they tried to get close to the 226 price tag, but failed. So you can see new money came in here. In this case, sellers. New money came there on the B period. C period didn't anywhere close. F and G. New money came in there. Dropped prices down. They somewhat tried it in J period, but not really that well. And then last 30 minutes is the M. They tried it before dropping prices down. You can see at the close it was lower at 225.44. Okay. So with the split, again, you're getting the same information as standard, but with split, you get to actually see when money has come in to defend an area. Okay. So that is market profile in a nutshell. That's a deeper look into market profile. I hope this helps. It really should. And my goal in this video in totality, is to take a deeper look into the tools, the professional tools that we use, and how to read them and how to spot opportunity. Try to shift your mind away from just looking at price. Now, we have all started, including myself, when I first started trading, I was taught to look at standard candlesticks, which is plain candlesticks, right? I was never taught to look at market profile because everything I was taught was to look at price and price only. If you were to change your mindset and think about value along with price, it would skyrocket your understanding. I am a strong believer that a change in perspective could change your life. Now, if you are a closed-minded person, and I'm not here to bash anybody, it's going to be hard to look at things differently. But if you are open-minded to looking at things a different way, in a different perspective, you'll start to see some value in it. Okay. Hope this helps as always. Next video or next clip, we're going to talk about order flow. And then after order flow, we're going to go and put order flow and market profile together in 3 examples and show where the opportunities lie and how to capitalize it. All right, guys, take a minute and we will come back with the next chapter. Traders, welcome back. In this clip, we're going to talk about order flow. And so hopefully on your screen, you are seeing an example of order flow. This day is going to be Friday, January the 17th, and each candle represents 5 minutes, and we on a 5 minute rotation. And as always, I trade 99% of the time. I participate in the auction of IWM. Again, as I said in other videos, it doesn't matter what you trade, which auction you participate in. Anything that trades will create a profile, a market profile, and order flow slash footprint. Okay. But for this example in these videos, we're going to talk about, or we're going to show IWM. Now, order flow. What is order flow? Right. So order flow is basically a visual representation of real time buying and selling. Is basically the difference between what other participants value at certain price points and when they don't. Okay. If you compare it to standard candlesticks, which you can probably even see on the screen, you're seeing candlesticks, but with order flow, it allows you to look behind the scenes and what's actually happening at each price point. So let's take an example. Since my cursor is on the 925 candle, which is technically 5 minutes before cash open, this is actually a good candle to look at. So let's just focus on this candle right there. I know my arrow's over it, but we're going to focus on this candle that represents January 17th at 9:25. Okay, so basically what order flow is showing you, is allowing you to see real participants, buying and selling participants, or the transactions between buying and sellers or buyers and sellers in real time. Now, this is the market's closed, so everything that's printed is going to be there for life. But if you can imagine the market open and 9:25 is happening 9:30, these will move in real time. So again, order flow allows you to look behind the scenes. If you're thinking of a standard candlestick, which you will see in order flow, it just allows you to, open the door, look behind it, or pull the curtain back and be able to see, okay, what is actually happening in the candlestick at certain price points. So again, we're going to focus on this candle because this is actually a pretty good one. All of them are good, but this one example is pretty good. So you're seeing the standard candlestick. This one is green with a large wick at the top, large wick at the bottom, and the body roughly between the open 226.81. Well, I'm sorry, the open 226.81 is here, and the eventual close of that is 226.88 roughly, with the extreme high of that at 227.30 and the extreme low of this candle 226.63. And as we start up higher and higher, you can see there's less and less volume. Okay. So there's a couple different ways you can set your order flow chart up to look. I particularly look at volume, which you're seeing on the screen, because if you've been in the game long enough, you know that the bigger players, they don't just tell you what they're going to do. They actually go through great lengths to hide their orders, whether they're going to buy or sell. But the one thing they cannot hide, I think is due to regulations, is they can't hide volume. Okay. So since they can't hide it, and I know that order flow shows it, the either high volume or low volume, then it made sense to me to look at volume rather than, let's say, the actual buying and selling, which is bid and offer. You can do that. You can change it to look at whatever you want to look at, the delta, bid and offer, or volume like me. But I choose to look at the volume. So what you're seeing is volume. So if we're focusing again on this 925 candle, we can see the further we go up, right? So if you look at your price actual axle on the right, we're gonna scroll up 226.90, 226.96, 227.01, and go up to 227.10, 227.20, even 227.30. As we're going, prices going higher and higher, there's other market participants that are not agreeing with price, right? There's less and less people willing to buy as IWM in this case, goes higher and higher. Again, this for the example of a television, right? Again, from part one, if you are in the market for a Samsung television, and let's say the prices were instead of the right axle, let's just say for that example, you went into the box store and that television for the Samsung television was $1,000, right? So let's just pretend 1,000 is up here, and as price go up to that 1,000, there's less and less people willing to buy, and that's identified by the volume. The further we go up, the less volume, the less people willing to buy it. Not just simply because of the numbers, but also because of the green and red boxes, right? There's less and less volume. Now, don't get confused with the colors, green or red. It really doesn't matter if it's green, red, blue, purple. What you're really looking for is the extension, right? So, like this box here between, let me get my arrow, makes it a little easier to identify. So, like this box is not getting me there. But say like this box right there. All right. Yeah, that's not good enough. Let me remove that. That's actually overlapped it. I'm gonna circle it. So this box right here, right? And this is roughly between 227.22 and 227 19. So that extension is not far, right? Compared to like here or this box here or even this box here. So as we going further and further up, those extensions of that box, which is volume, is getting less and less, right? Less and less. So that's telling me that in real time, real market participants who are in the market or who are participating in the IWM auction are not agreeing with prices going up here. They don't feel that IWM is worth the price tag of 227.27, 227.30, or so on, right? So they what does the box store have to do? If you look at the example of we talked about with Samsung TV, if if they're advertising $1,000 for that television, and more and more participants or more and more people who are in the market for a television, Samsung television, do not feel that that television is valued at $1,000, well, that means less and less people are willing to buy that television for 1,000. So the box store actually has to drop the prices to make it more attractive, right? So just imagine this is Samsung and the prices, right? So this just, for example, this is Samsung and the price at the 227.29 price tag, more and more people are not willing to buy Samsung at the 227 price tag. So the box store has to continue to drop it. And this is what's happening, right? They dropped it down to the 226.84. They're not really getting anybody willing to buy it, right? So they kind of continue to drop prices until it gets to a point where more participants or more people who are in the market for that television is willing to buy at a certain price. Let's say price went all the way down for this example here, all the way down to 225.38. All of a sudden you getting more and more participants saying, that 227 price tag, I don't think IWM or this example, that Samsung television is worth that 227 price tag, but at the 225, yeah, I think I can buy that. I think it's worth 225. And if you get more and more participants feel that way, now you can see volumes picking up. There's more and more people willing to do that. You can see behind the candlestick, pulling that curtain back and seeing exactly which price point that there that other participants are feeling like, yeah, I think it's worth the 225 price tag. Let me buy up. Now, that buy up can be an all day reversal, or it can be just a moment, maybe a couple minutes. And I think, yeah, it only lasted like 5, 10, 15, 20, 25, 25 minutes before it was like, all right, yeah, that price tag was cool, but the majority of people didn't feel that way. So once it got back up from the 25.38 price tag all the way up to the 26.30 price tag, more people felt like, all right, yeah, it was worth 25, 225, but the 226, nah, I'm not willing to pay 226. So with order flow, just like we saw in part one with market profile, we got to see other market participants and how they felt about in the example of IWM, if it is going up in value, do other participants feel that it's worth that price tag? Um, Price is just advertising, right? Just because they put $1,000 or they put the tag of 227 or whatever the price is, just because they advertise it for that doesn't mean you or other people like you who are in the market for that feel that it's worth that price tag. Whether you playing IWM like myself, again, if you're a cryptos trader, a forex trader, futures trader, if you're in the market for a television or a phone or whatever you are in the market for, price and value make a difference, right? Just because they advertise the price doesn't mean it's worth the price. All right. So this one is pretty quick. It's pretty self-explanatory. It's not a lot that goes into it. Again, order flow allows you to pull the curtain back and look at the interest at each price point. You get to see real transactions between buyers and sellers at each price point. And when you add volume to that, you get to see, okay, well, how many people are willing to buy in this example IWM at the 227 price tag, the 227.30 price tag, the 227.20 price tag, the 227.10 price tag. How many people are actually willing to buy IWM there? There's not a lot of people because there's not a lot of volume, right? So what does the box store have to do, i.e. the market? They have to drop prices in order to attract buyers. Same as if you're in the market for a television and you go to Walmart, right? If you're in the market for an iPhone, you go to the Apple store. If enough people are not willing to buy, they have to drop prices, or vice versa. If the prices are great and there's enough people that are willing to buy at those prices, then the box store is gonna test prices. So if whatever you want to buy, say an iPhone is selling at $500, and there's enough people willing to buy that iPhone at $500, then you know what the box store is going to do. Apple's going to do. All right, well let's test at 600. Let's see if they're willing to buy at six. And if more people saying 600 is a good price, they're going to test it at seven, at eight, at nine, until that slowing down of buying happens. And then they got to do the same thing all over again. They got to drop prices to attract more people to buy. Right. So order flow allows you to look inside of the candle. You get to see actual transactions happening in real time. All right, so the order flow, this example, this second chapter, it's not going to be a long one because it's pretty self-explanatory. There's not really too many ways you can look at order flow. Again, depending on preference, you can look at the actual bid and offer, and let's actually go there. There's a couple different ways to look at it. And I think, yep, so this is it. So I like to look at volume, right? So what you're seeing is volume. You can look at buying trade or buy trades. You can look at trades in totality, sell trades, volumes. What I look at, buying percentage, buying volume percentage, sell percentage, delta percentage, or the actual bid and ask, which is actually buying and selling in real time. Again, I prefer volume because volume is the only thing that the bigger players cannot hide. So, and volume is the only thing that the bigger players can actually make. We can't do that as retail traders. We're technically retail traders. Our orders do not move the market. What moves the market are people like banks, hedge funds, some of the bigger prop firms. Those orders actually move the market because they're playing with millions and billions of dollars. We're not playing with that. We're not playing with nowhere near that. So our orders do not change that. All right. So that is order flow. Hope this brings value and have you understand a little bit more of the professional tools along with market profile. You put order flow together, and it gives you a better understanding of direction. What way or what are other market participants thinking? Are they thinking the price tag is worth it or not? All right. So that concludes this section. In the next three sections, I'm going to give you an example. So we're going to put both market profile and order flow together, and we're going to give three examples on whether other participants felt like it wasn't worth it and price dropped, or they felt that price was worth whatever you are participating in and the market went up. All right. See you on the next chapter. Thanks. Traders, welcome back. In this first example, we're going to talk about how other participants viewed IWM. We're going to look at January the 13th and see why buyers, in this case, other market participants, felt that the lower price tag was worth the buy. All right, so hopefully you guys are seeing my screen. We're going to focus on January 16th profile, which is here. Make that a little full screen here, right? So we're going to see um, just the overall from January the 6th all the way to January the 10th. We see not only did prices drop, but value of IWM dropped. So we get down to the Monday the 13th, and we're seeing prices open out of balance. So, like I showed in the first example, or we talked about in market profile, if price opens either below the entire day's profile of the last session or above, that's considered out of balance. Either you're out of balance to the upside or you're out of balance to the downside. If you prices open within the range of the previous day session, that's considered imbalance. The market is in balance. So for this example, January the 13th, the market actually opened out of balance from the previous session, right? The very low of that was of the last session, the January the 10th was roughly 215.28, right? And the market on the 13th actually opened around 214.45. So that's opening out of balance to the downside of the last session. Okay. So we can't use this session as a reference point. We have to find another session, another profile where price traded it in the 214s and see where we can find opportunity. Again, we're seeing value dropping. Now, can we go back in time possibly and see maybe where other participants felt like the last time price was in the 214s, maybe it was worth a buy, and other people who are participating in the IWM auction felt the same way. Okay. So January 13th is the profile we're focusing on. But since we open out of balance to the downside of the previous session, we have to find another session, another reference point. So we go all the way over to actually to my birthday, I believe, which is October the 10th. I believe that's the profile. Yep, October the 10th, right? This is the last time prices were in the 215, 214 price tag. Okay. So when price, let me make this a little bigger. Hopefully you can see it right here. Here's the October 10th profile. Last time price, this is the open at 215.90, roughly 215.85. Last time price came down to the 214.90, 214.74, even 214.61, right? Last time price came up there, went down there, the market bought up, right? So other participants felt that the 214 price tag, the 215 price tag was worth buying, right? We see that other participants bought the market higher because that 215, 214 price tag was very attractive and it was worth buying. So if price comes back to just thinking logically, right? We saw what other market participants have done in the past, preferably October 10th profile. When prices got to the 215 price tag, 214 price tag, other participants, other people who participated in this market or in this auction felt that 215, 214 was a good price and IWM was worth buying there. So logically, the next time price gets there, we can game plan before the market opens and says, you know what? We saw that other participants got there and got to that price point and they liked it and they bought it. Another thing to pay attention to, we was talking about TPOs, right? Here is the first 30 minutes, A period. All right, this is just a standard way of looking at the profile, but we can see it took one profile or one period, a period, to drive the market from roughly 214.60 all the way up to 215.44 in a rapid pace, only in 30 minutes. Right. So this is called a single print. This is where other participants felt strongly about IWM at the 214 price tag and felt that this was worth buying. Okay. So logically, when we get there, back to that price point, it would be logically to think or logical to think that when we get there, going back to January 13th, open at 214.46, logically we should buy there, right? And now you can see what happened with the profile and the price. Price opened roughly 214.46 and closed higher at 217.28. So first time coming back there, I think that's a good place to buy because we see it in the profile. We actually got to see what other participants have done. Now that we know that, we can game plan to buy. Now we just got to look at the order flow. We got to see the interest of buyers saying, you know what? I think it shouldn't go any lower. I like it here. Let's buy. And then we're going to see the market test those prices. All right, if they're buying at 214, will they buy at 215? Will they buy at 216? Right? So we're going to see that in the order flow. But first, you want to start with market profile and look at the past. What has other participants done at these price points? Is it value there? Just because it advertises that 214 price, are other market participants feeling that 214 is the value, that price point is value there, and we can buy or not? But we can see in market profile, just we kind of went ahead of ourselves. January 13th profile, we actually did buy up. But let's look at it on the order flow side and give me a few seconds. The Go charting is a web-based product, so give me a few seconds to get there. No, actually, it got me there. It worked out. All right, so here is, let me make it a little bigger and a little smaller. I'm sorry, the easy to read. And there. So here is January 13th. So we already determined by looking at the market profile that the 214 price tag, other participants on October 10th liked it and thought that IWM was worth buying there. Now, this is the first time, January 13th is the first time prices got back to that 214 price tag where we know other participants have bought there. So we can game plan before cash open, before 9:30 to say, I am looking to buy, but I need to see that evidence, right? So here is the first candle at cash open, 9:30. It opened at 214.50, so here roughly. Price tried to drop there. As you can see in value, no interest in selling, right? No interest. You can see there was interest here to buy it. Let me make it a little bigger. Hopefully I can see it. Here, 288,000 were interested in buying here. But as the price dropped, there was no interest in prices going further down, right? They were looking to buy. Here is that, and it ended up buying up on the first 5 minutes. Second 5 minutes was probably taking profit. You can see this drop down. But then as prices went back to the 214.20 price tag, 214.10 price tag, even almost at the 214 flat, right? Well, actually it did, 214 flat. Prices went all the way down here and there was less and less interest, right? Other participants felt that that IWM in this example was worth the 214 price tag to buy up. And you can see green candle there, next 5 minutes up, 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 and it kept going up. All right. And I didn't point out, but October 10th extreme low was there, was which is the very low of that profile, with the very low of prices or price action that day. And it was new money came in and defended that, drove prices high. Back to value, right? October 10th, value low, back up to that 70% of value right below of it. This was a good place to take profit. And then as it comes back into that 214 price tag, still people were willing to buy right here. And they bought up some more, right? So that is the first example of using market profile in order flow, market profile really helps you to understand what other participants have done at certain price points and whether that value of whatever you participate in matches the price tag. Again, I go to the example of a television. Just because you're in the market for a Samsung television and they are advertising $1,000, that does not mean you have to pay $1,000. It's up to you to determine whether that TV is worth $1,000. If you get enough people to feel the same way, then what the market has to do, or in this example with the television, what does the big box store or the store have to do? They have to lower prices to make it more attractive for other people to buy. The market is the exact same way. If you can, like I said at the top of, I believe it was the market profile section, a change of perspective can change your life. If you are open to looking at it in a different way, you will become more successful. Okay. So look at it more so as an auction place, or even better, if you look at it, you could put any item together, whether it's a television and examples that I've done, iPhone, or you can look at it even as a house if you're in the market for a house. Just because they advertise price doesn't mean it's worth price. So if you can not only talk about price, and I know as a retail trader at the beginning, and I know a lot of people learn the same way. I learned the exact same way that pretty much everyone else has. I read a lot of books. I looked at a lot of YouTube. I paid for courses, and they all talk about price, right? But if you could change your perspective and not just focus on price, price is important, but I want you to look at it as, is it worth that price? And what tools can I use to help me see if whatever item I'm participating in is worth that price? And you can look at the receipts, right? Market profile is a receipt basically of all buying and selling transactions. And even order flow, each 5 minutes rotation, which each candle represents 5 minutes, you're seeing a receipt of what buyers and sellers have done, the transactions between buyers and sellers. If those things along with price match up, then you go one direction. If you're seeing value and price differ, then you know that there's no agreeing in price. Or vice versa. If you see value in price and people are buying at that value, then you know there's agreements. There's interest in buying. All right. As always, I hope you guys find value. I hope that the first section, market profile, second section, order flow, and my two examples, this being the first and then the selling being the second, I hope you guys are able to see the difference. All right. Go on to the next section, and I'll see you soon. Traders, welcome back. So in this clip, we're gonna put everything all together. In the first clip, we talked about market profile. In the second clip, we talked about order flow. And in this one, we're gonna put everything together so you guys can see how market profile and order flow work together to be able to come up with a analysis on whether other participants will potentially buy or sell at certain price points. To correct myself, I did say that I would do three examples, but it makes sense to do two. So here is the first of, or here's the second exactly, example of order flow and market profile. So let's talk about um, what we're going to see in front of you. So hopefully you guys are seeing market profile, and I have two profiles that I want to reference. So we're going to actually talk about what happened last session. Last session was January the 17th, I believe. No, I'm mistaken. Um, and why other participants sold that day. Right. So, but to get to that point, we need to go back into time. So let's go first. Let's talk about the 17th. So this right here is Friday, January the 17th profile. So this is the one where we actually sold the market down. Other participants felt that the 227, the high 226 price tag wasn't worth it. IWM was not worth that price tag. But since we pre-market opened roughly around the 226.93 price tag, you have to find a reference point. This is where Just to kind of give you some extra stuff, we kind of open, or not kind of, but we open out of balance to the upside. So whether you are in balance or out of balance, it all references the session prior, right? So for this being January 17th, we have to reference, first of all, the session prior, which is January 16th. And if this is value, right? Or balance. Balance is considered the entire move of the day, from the very top of price to the very bottom. So for the 16th, the very top of the 16th price movement or price action was roughly 225.33. The very bottom of the 16th price action was roughly 222.73. So that is all of the movement for that entire day. Now, when you open above or below that entire movement, it's called out of balance. So for the 17th, it actually opened way out of balance from the top of the 16th profile in almost 227 range, or the 227 price tag. So that's considered out of balance to the upside. Now, if Friday opened below the bottom of the 16th at roughly 222, then that would be out of balance to the downside. Right. So if the next day, say the 17th open within the range of the 16th, that's considered an imbalance. So the market is quote unquote balanced. When it's out of the range, it is out of balance. Okay. So the 17th opened out of balance of the previous session, which was the 16th. So you have to find a reference point. So if it was opening inside the range, then your reference point would be that profile. But since we are out of balance to the upside, our reference point has to go back in time, and January 6th and also January 7th becomes your reference point. Okay. And if you go back to those days, just looking at a bigger picture, IWM has gone up in value from December 30th, the 31st, first, January 2nd, January 3rd, and then January 6th and 7th. Value has gone up. Okay. So we know that the market has been testing higher prices because there were more and more people willing to buy at the 220 price tag, the 221, the 222, 223, 224, 225, and 226, and also the 227 price tag. So the market was testing, raising prices, and see if there's more and more people willing to buy at those prices. Okay. So on the 6th, January 6th, we see a shift. And the reason I pointed at this one really more than that, because you can see the shift happen on the 7th. But even though value has gone up, you can see price went down, right? So it opened from the 3rd to the 6th, value has gone up. On the 6th, price was advertised or opened at 225, 76, 78 roughly. Okay. Price went all the way up to 227 price tag before other participants felt like, even though they're advertising it, is IWM is not worth the 227 price tag. And then eventually they sold all the way down to 224, right? So as other participants were in the market for IWM and they were buying less and less at the 26, the 27 price tag, 25, 26, and 27 price tag, other participants say, IWM is not worth 227. It's not worth 226, and it's not worth 225, but it potentially could be worth 224, maybe. So we saw a shift. Value of IWM has gone up, but other participants, it's not worth that price tag, so I'm not going to buy no more. And then you can see here on the 7th what happened. That shift actually continued down and dropped. So I'm pointing here at the 6th and I'm pointing here at the 7th because that's our reference point. We opened out of balance Friday the 17th from the 16th, and now we have to reference the profile that's in that price point, the 227 price point, the 226 price point. So in there, we can see that shift. The last time prices were up here, other market participants shifted. Value went high, but other participants wasn't willing to pay for that price tag. So logically, just as a game plan, the next time price comes back to the 227 price tag, 226 price tag, we know that other participants wasn't willing to buy there. Okay. So that's what we're seeing in the market profile. We're seeing the top of value, which is here where my arrow's at. And we're also seeing the bottom of that value where this arrow's at. So this makes up the 70% of value. Okay. And then if let's pay attention to also the seventh, this profile here. Let me remove that arrow. And let's remove that arrow. So this profile here is January the 7th, right? So we can see heavy selling from that 226 price tag, 227 price tag. So we know logically, now it doesn't mean we're going to be right 100% of the time, but just based on logic and based on what we know or how we know the market actually moves and what the market actually is, and market is a big auction place, we know that the next time prices get to the 226, 227 price tag, that logically what other participants have done has sold, then let's game plan to possibly sell. Now, you also have to bring in economics. If there's a report coming out where there's jobless or PPI, CPI inflation, if there's inventory, gas and inventory, or if there's a Fed announcement for rate cuts, stuff like that can drive markets up or down. But if you have, let's say, market profile, and you also have a negative economic news, whether it's again jobless or inflation or whatever, that can be another catalyst to say, all right, well, news is bad. And what we saw what other participants have done in that area, you can game plan before the market opens on whether you want to do or what you want to do, whether you want to buy or sell. In this case, you will want to sell. So then you'll move over to order flow, which we'll do in a second, to validate if newer money or other participants are feeling the exact same way. They're feeling like prices in the 227 area is too high for IWM. And again, it doesn't matter what you trade. Anything that trades provides a profile. I just trade IWM, so you can do this with anything that you trade. Okay. So I wanted to focus on here as well, the seventh, because we saw a massive amount of selling and it only happened in two TPOs or two time frames. Again, each each profile represents a day and is broken up into 30 minutes, and each letter represents 30 minutes. So the A period represents the first 30, B is the second, so on, all the way up to M, which represents the last 30 minutes. So this A period and B period didn't stay at the 226 price tag long, right? At all, 225 or 224 price tag. It dropped, it didn't drop fast. So that's telling you that we saw that shift from the third to the sixth, even though value has gone up, price went down. There's participants that felt like even though they're selling at the 225s, the 226s and the 227s, there are enough people in the market who participated in this auction that did not agree with price. And then you can see what happened on the 7th. So logically, when we get back up there, especially if it's the very first time we come back up there, logically, we're thinking there is a potential that enough participants will feel the same way. Okay. So this is called a single print. When there's one TPO, one time frame that stays at price, that doesn't stay at price long, that drops prices in one period, that's called a single print. And I like to mark those. And I mark those on my order flow. We're going to see that in a second. But I wanted to put that together with the market profile to see that in real time, I'm sorry, in past, that other participants did not like that high price tag. Okay. So let's go over to market profile. I'm sorry, the order flow to see now if other participants want to sell that at that price point. If they do feel that 226 and 227s are too high. And this is Go charting. So Go charting's a little wonky, but it is a web-based. So give me a second to adjust it real quick. If I can find the right, there we go. Here, go back into there. There we go. And give me a quick second to adjust, make it easier to see. All right, cool. So this is January 17th. Again, we saw in market profile that the 227 price tag, other participants wasn't willing to pay for that price, right? It was too high. IWM went up in value, but other participants didn't agree with the value and did not buy. So the market had to drop prices to make it more attractive. So we want to see that happening, right? So we saw market profile, we saw the evidence of what they did in the past. Logically, we're game planning that since especially this is the very first time prices come back to that area. Logically, we're thinking, all right, they didn't like prices up here. They didn't feel that IWM was worth the 227 price tag or even the 226 price tag. I am looking for evidence in order flow. This is the receipts of or the transactions of buyers or sellers happening in real time. A lot of times you won't get a clue, but Friday actually gave you a clue right before the market opened. This candle right here, okay, that right there gave you a clue right before the market opened. As we gone up, right, we're going to the 226.90s, 227 price tag, 227.10, 227.20, almost 227.30. You can see there's less and less volume, sorry, less and less volume, less and less interest. So that's telling me in real time that what we saw in market profile, that when prices got up to the 227 price tag, there were less and less people willing to buy. So now we become the order flow again, pulling back the curtain behind standard candlesticks. We get to see the actual interest. Are they interested in buying? It doesn't look like it, right? You can tell by the wick, but if you pull the curtain back, you actually able to see in real time that they're not willing to buy at the 227 price tag. So our game plan looks like it may work out. So it's a sell down. And here's the open at 9:30, and that was just a massive selling. They tried it again at 9:40, still wasn't interested, massive selling. They tried it again at 9:55. You can see there's less and less interest as price was there, dropped it. Okay. So that's one example of how you put in market profile together with order flow, you're able to see um, MGI, which is market generated information, right? You're seeing actual transactions between buyers and sellers who are participating in this example of IWM's auction. Again, it does not matter whatever you trade, whatever auction you participate in, they all provide a profile and a an order flow or footprint. You're able to see this happening in real time. If you're using standard candlesticks, you cannot tell just by looking at standards. If all this was gone, and I think I can't do it. If I do it, it'll remove everything. But just imagine the information on the right of the chart or the right of the candle, which is volume. Imagine that's gone and it's just a plain candlestick. You can kind of make the case that it was a wick, so they didn't like it, right? So prices weren't accepted there. But if you don't have market profile, you wouldn't really be able to, game plan. Like you wouldn't know what other market participants have done in that area unless you had the profile and then the order flow to back it up. All right. So I hope, as always, I hope this helps bring value and a bit of understanding to how the market actually move by using professional tools and just being able again open that door, pull the curtain back to be able to see this information in real time when it if the market was open or just being able to see it in this example. I hope it brings value and have maybe give you a little extra step towards using professional tools and getting away from the standard candlesticks. All right, so in the next clip, we're going to do another example of buying in this case, when we're going to see an example of where other participants felt that IWM was worth a certain price tag to buy up. And we're going to see how the market tests, right? So if 224s, for example, if other participants felt like that was a good price and was worth 224s, we're going to see how other participants bought and how the market tests. All right. If they're going to buy at 224s, let's see if they'll buy at 225s. Okay. If they're going to buy at 225s, let's test it. Let's see if they'll buy 226, 227, and so on. All right. So again, hope this helps, and I'll see you guys in the next clip.